Good evening, and this is going to be my presentation on Pancakeswap prediction. Simple Stoch-RSI method. Um, this is going to be a very nuts and bolts foundation building set of slides. I think there's 11 slides in total. So this could go on for a very long time. And at the end of this, I will be doing some paper trading. So we will be going over everything to get you started learning the fundamentals of trading and then hopefully learning to apply that to Pancakeswap's prediction. So first, the disclaimers. Not a financial advisor. I do this for fun. I have no formal training or credentials. I am not responsible if you lose money. I have to stress that. I will not feel bad if you lose money after watching this. It's just not going to happen. It's not my responsibility. I am trying to help you. Specifically, right now, I am telling you paper trade. Do not, until you have at least a 60% success rate, paper trade. Pancakeswap prediction is for entertainment only. This is supposed to be fun. If you're not having fun, stop. It's not a way to win it's not a way to win money. It's not a way to get a Lambo. It's not a way to pay your bills. Every once in a while I buy dog food and tacos and maybe Pepsi. And I play this for fun. So in no way am I promising you that you're going to make $1 million. If anything, the moment you get that 60%, you're going to lose money when you start actually placing money because you will then be overconfident and you will need to have your confidence level knocked down. And I could make a whole 30-minute video just on the confidence cycle when it comes to traders, when people first start trading. But this is for entertainment purposes only. So please be entertained. I can't go any further without talking about addiction. Addiction is very serious. When I was a kid, when I was young, I had a lot of friends that were addicted to betting on basketball, and they had systems, they had spreadsheets, they had everything worked out, and they were placing their bets, and they would always say that this one is a no-brainer, or I'm up, I'm down, and then sooner or later they'd get overconfident, start placing too high of bets, and then they'd be in debt. That's not where you want to be. You need to stop. You need to talk to somebody. You need to be open and say, "Hey, I'm playing this stupid game and it's taking too much of my life." And that's getting help. So once you do that, then you have a real good chance of breaking the cycle. The sooner you recognize the symptoms, which is if your heart is racing or your hands are getting sweaty, you need to stop. You need to just that needs to be your first number one rule whenever doing prediction. There are times when I'm trading, just doing regular trades, that it'll be like 1 o'clock, 2 o'clock in the morning, and I'll say, hold on, I don't care. I need to sell everything or set stop losses and just go to sleep because my hands are getting sweaty. I'm thinking about, oh man, I'm already at like 4%. I'm close to my stop loss. I want to watch this, right? Well, Pancakeswap is worse because it's 5 minutes and it packs you with tons of adrenaline. I know exactly what that adrenaline feels like. I feel it every time that I play the game, which is why I don't play it that much. Um, so, with that said, let's move on. We're going to be using TradingView. This should be a free tool that everybody can get their hands on, so you don't have to buy Market Cipher, you don't have to pay anybody for a course. I would suggest that for your first few years in entering into the trading realm, that you don't buy anyone's course. If you do anything, go to Amazon, buy a book, buy an audio book. Doesn't matter to me. Use YouTube as a reference. There's so many good YouTube videos out there. You don't know where to start, and that's the thing. The problem is that prediction brings a lot of people that don't know where to start into the game. When where they really need to be starting is not with prediction, but with the basics of trading. So with that, we're going to use some very basic trading tools, tools that have been around for quite a while, at least since the 90s, at least since I was a kid. Um, we're going to be using specifically the TEMA, and that is our 50, 100, and 200. This is going to provide an indication of the trend, the major trend that we're working with overall. What it will also do, though, it will also provide us with different levels where we can expect support or resistance depending on whether we're going up or down. And this can be very helpful when making predictions. We're also going to be using the Stoch-RSI. And what this gives us is an indication of when things are going to be oversold and when things are going to be undersold. Now, this is not a precise tool, and it's not going to give us any type of future activity prediction, because if once you watch this and once you've paper traded enough, you will see how this tool is not it's not 100%. It's not a guarantee that you're going to make every prediction if you do this. I wish I could say that. I wish I could say that, right now I'm hovering between 62 and 70%, but I don't do this a lot. And I'm actually expecting that after the last couple days of paper trading for 2 days straight, not one, but 2 days straight paper trading during some really weird stuff, I might add. Um, I don't expect to get over the 70%. I expect to get closer to keeping 70%, which is good enough for me. It's good enough for tacos. 60, 62% is good enough to get some tacos every week. And we're talking with a very small stake. And that's the other thing, is that always use a small stake when you're betting on something like this. The stock RSI at the 1 minute and the 3 minute is very fickle. It's very hard to make money. You have a small time window where it can easily go up and down within that 5 minutes. So keep that in mind. But this is by far the best tool that I've seen to help me with prediction. And then lastly, we're going to add another moving average to the equation. So in doing this, in leading up to my 2 days of paper trading, I played with a few other indicators. And what I found was that I wasn't getting a good enough indication from the 50 and the 100 and the 200 to know what swing I should be placing. It wasn't an accurate picture to know if I should be placing up or if it was a fairly safe opportunity to place down. Let's say that's during an upward momentum. So that's why we're going to add the third moving average. So we're going to do that right now. So this is our canvas in which we're going to be watching our price movements and making our predictions. Um, we're going to start right here with a blank canvas, only it's not blank. So this should be the default tool when you pull up TradingView. If it's not, I want you to just click candles, okay? And at first, you're going to look at this. Now, you need to learn candlestick patterns. There are cheat sheets out there. You can type in Google Images, you can type candlestick pattern cheat sheet, and you will come up with a whole bunch of cheat sheets. But you need to learn candlestick patterns. And I'll tell you why. We're at the 3 minute right now. So what do we need at the 3 minute? Well, we need three candles to make a prediction. And that sounds like 9 minutes, but it's not. It's actually less than six. It's just a shade under six. The time math is kind of hard to explain, but your 5 minutes can be shifting anywhere between those three candles easy, right? So really 4 candles, 5 candles on the 3 minute is what we're really looking for on our swings. But if we just look at the candle patterns and we just go back here, we can see right here that we have a lead up and we have a spinning doji. And I call these indecision dojis, but this is a spinning doji. This is a red doji, however. So this has its own candlestick pattern, and I believe that this is the abandoned island, right? So you have an abandoned island. An abandoned island is a doji pattern for going down. The next one is what I really consider an indecisive doji, right? And this guy just went down afterwards. And that's the power of candlestick patterns, right? So you have a downward hammer here. You have basically another abandoned island. And then you have downside. Now, you're not getting the downside. You're not seeing how much weight is being applied. But if you're really good with candlestick patterns, and you have to be really good, but if you're really good with candlestick patterns, there's really almost no reason why you can't hit this. And if we look at the 1 minute, we can see kind of some of the same things here, right? We see an abandoned island here. We've got a classic abandoned island, which is three soldiers up and then an abandoned island, right? And then boom, we're down, and we're down for 1, 2, 3, 4, 5, 6, 7 indecision, but we'll say 7 candles were down on the 1 minute. And that would be a great one to catch. And these are the swings that we're trying to catch. We're not trying to catch anything that's sideways, right? We don't want to be catching sideways, and we look for our sideways movement on our 3 minute. So for prediction, since we have 5 minute time windows, but we have to make our prediction within a minute before that. That's the goal, is to be able to say a minute before the prediction starts, right? Which gives you 15 to 30 seconds, depending on how you look at it, to say yes or no. But a minute before, we want to make that decision, and we want to let momentum carry us through. So the other thing is, a classic rule is whatever goes up must come down. So when you see a big up, you know it's going to go down. When you see a big up, you know it's going to go down. When you see a big up, you know it's going to go down. So you can look at those candlestick patterns, and these are classic patterns, right? Here we have three soldiers up. We have abandoned island. Right here, we have an engulfing candle. I hope you guys can see this. Let me pull this up so that you can see exactly what I'm talking about. Let's walk through this system, right? We have what I would call sideways action. And this is important. This is important stuff, right? We have what we would call sideways action, right? I would call that sideways. I might be able to go further to the left, but right here we have our abandoned island. We have three soldiers up. We have an abandoned island, down, down, indecision, down, down, engulfing green candle. And that right there on the 3 minute might be enough. In this case, it's really shady. You may or may not make this candle, but this would be a good contestant the moment that this candle started trading above the second candle here. You've got an engulfing green candle, and if your prediction lines up, you could do that. So now that you understand a little bit about the candles, hopefully that'll spark some interest. We're going to go to our first tool that we're going to add, and that we're going to do under indicators. We're going to go to search, and we're just going to type TEMA. And we come up with a couple. The one that I'm using is the triple moving averages 50, 100, and 200 by H.M. Borges. And there's 1,248 people using that. Go ahead and put a star next to that, and we'll go ahead and click on that, and we'll add that right here. So this is where we're looking for supports. Where are we going? What is our trend? When are good times to be looking at placing, and when are bad times to be looking at placing? So let's reset our thing. We're going to zoom out here a little bit. All these lines are doing is looking back 50 candles, 100 candles, and 200 candles, and plotting its trajectory, its support, its where it would want to be if it was 30 candles back. I have no idea. Go look that up. However, these things really give you a lot of information. For instance, if we go back to here where we're real close, and this is the 3-minute, right? This in here is very tradable. But if we zoomed into the 1-minute, this right here, and this is small, this is not tradable. And this is why we're going to use different this is why we're going to use different areas. But the fact that these lines are fairly close together, the fact that they're bouncing around and they're wiggling close together, this means that your predictions are going to be harder to time, right? You can still time this in here, but for instance, this period right here, and this is something you have to understand. This period right here is 30 minutes. It's 24 minutes, but basically that's 30 minutes that I can tell right here from looking at this that we did not want to make any type of predictions in there, because chances are at that point it's almost 50-50. So that's why we're using these support lines. These support lines and the distance that they are away gives us a good indication about the swings that we'll be looking at. What swings are coming up, I should say. So the other interesting things about the EMAs here is that when we see crossovers, we should be seeing huge leaps coming up in the future. And I know they don't look like huge leaps, but on a 1-minute time frame for 5-minute intervals for 5-minute windows, these are pretty big swings, and they become fairly predictable, right? So we're looking for our first real trade up over, which would be when right about here. We're looking for the first bounce down, and then we're looking for windows that are going up for our prediction, right? And inside of here, this is the 3-minute. So keep that in mind. If we zoom in a little bit, right? This is where we actually see our crossover. We're trading up above here. We dip, and then once we dip, we start going up. Right here, if you can get in on this candle anywhere within that 3 minutes, you've got another full 3-minute candle, and then a second with a very shallow pullback, I might add. And if you actually go to the third candle, you've got all up. It's all up from after that. And that is a win if you get within this candle or this candle for your prediction, right? But this is timing. This is something that you need to learn to do through paper trading, right? I didn't just make this up. This is something that happens quite frequently, especially at these low volatile time frames. Cryptocurrency is already volatile at the 4 hour and the 1 hour. Trying to trade and do prediction on the 1 minute is nuts. So we can see that we have these big bump ups, right? So until we fully touch this line, we really don't have our second or third bump. So I believe in things in threes. You need to paper trade and come up with your own ideas. But if I say this whole thing right here is my first bump, is my first real bump up where I stay above it. Let me see if I can make sense of this. This whole thing right here is my first bump up. Then I have at least one more, then I have at least one big opportunity to get in at one or two predictions on this big upwards movement right here. And this is big. I want to point out though that this is also dangerous because right in the middle here, you have downward candles. But if you were to get in on this candle, once it's anywhere during the body, your second candle you should be golden, and this candle you should be out of the way, right? Even if you took it on the very end of this candle, let's say you're just YOLOing, you would still have an opportunity to skip this whole candle or possibly hit it when it's on its high. I mean, the bottom is right there. So um, this is the swing you're trying to do. And for beginning, during the beginning, all you should be placing on an upwards on when you're in an uptrend, all you should be looking for and all you should be placing are ups. Okay? And then we have a down. Now this is an opportunity to predict down. And when you see gosh, everybody's going to be like, I placed all these predictions based on abandoned islands and I lost all my money. And yeah, because you're going to see one, two, and you're going to see abandoned island, and you're going to say, I'm going to do down, and it's going to go straight up, right? And the reason is, I mean, there's many reasons why, but the reason is well, for one, you didn't give it three soldiers, but I'm digressing, right? Um, But you could do the prediction down. But don't. Don't worry about that dynamic right now, right? I mean, imagine how much easier it would be to become a race car driver if the first couple weeks you went out, you only had to turn right or left or whatever you turn in NASCAR. I'm not saying NASCAR is easy, but you'd get used to hitting the gas, you'd get used to what it's like hitting the G's, right? And then when you add in the turns, then you don't have to worry about gas and stuff like that. Then you just need to worry about going left and right. And then a couple weeks later, and you see what I mean. You're trying to build on something. Please only go up when you're beginning. You can do the trades. I do the trades down. I'm not going to say you're a bad person if you do the trades down. But we can see, according to my one, two, and then I always expect a third one, and then I'm wondering about the rest of it, right? So if we take a quick look at this right here, we're not looking at sideways, but we're not really looking at good action. And the other thing I want to point out on the down is if you look at this down, there's plenty of you might win the first down, but you might get shaken out of the second down. And then you're going to get frustrated and you're going to go, I know this thing's going to go down to the EMA line, and you're going to place another down, and then and then it's going to go back up to here, and you're going to lose another one, and then you're going to get frustrated, and you're not going to walk away, right? But you're going to say, okay, I'm not going to back off, and then you're going to be like, well, maybe it'll keep going even lower, and then you're going to predict low, and then boom, you're going to miss the whole slide up here. So patience, you'll see in a little bit the whole reason of paper trading, but these EMA lines, you can see how they follow. And right here, when it does drop, it not only drops down here and boogies a little bit, but then it goes down to the red, and then it screws around on the red, and then we're working our way back up to the green. So we're actually working our way right now, maybe into a whole nother upswing, right? So we may bounce around, and let me get my little brush tool. We may bounce around here, right? And then we'll go under the EMA, come back up, and hopefully we'll do a good bounce, and then maybe a bigger bounce, and then screw around a little bit more. But it's very possible that we could see very weak bounces, and then we could start going down. So that's our TMA. Hopefully that makes sense. Hopefully you're seeing the value in this, seeing where these bounces are happening, seeing why we use these lines. When we're on these lines, we want to look for sideways, especially when let's zoom in a little bit, especially when we're in a section like this. Now, to me, right, if we look at this section, just this part right here, this is fairly tradable. This is still fairly tradable. We're not in an upswing, so that doesn't follow the rules, but I can see why people would trade this, right? However, now that we're bouncing up, I can see another thing here while we're on this line. So until we bounce up off this line, right, we're still kind of in a parallel swing. And if I were to go down to the 1 minute, this would probably be untradable. This would be an untradable block right here. So let's do that just to test that. And there we go. Totally would not be doing this swing. You would get wrecked. I would get wrecked. I don't know. Maybe you're a trading prediction Chad god, and you would be able to do this. I would get wrecked at every turn during this section right here. And keep that in mind, I was able to recognize that from where these EMA lines are, right? How close they are together, how we're bouncing next to them. All right, so hopefully you see the value in watching these. Now, we're going to go to our next one, our next indicator, which is our big boy, which is our Stochastic RSI. This is where our time frames become real important. So in the past, when I've recorded this, I've spent way too much time at the 1 minute for me, for this system. And at the 1 minute, I'm looking here. But you'll see that I'm flipping through, and I'm flipping through really fast. And what I should be concentrating on is the 5 minute. Now, as we do this, each one of these will have their own view of the 50 and the 100 and the 200. They will also have their own view of the RSI. So if we looked at the RSI right now, we would see that we were at a 100% on the RSI overbought, and we are now coming down to 85% on the RSI going down. So this is set to the default, right? 80 at the top and 20 at the bottom. Now, I want you to look at this very carefully. If we go back here and we look at this squiggly part right here, right in here, and I should be able to use a drawing tool, right? Right in here, you'll see this squiggly part, right? This will wreck you on prediction if you're using the stock RSI. This will absolutely wreck you because you will think, okay, I'm above. Oh, now I'm below. I'm going to place. And then it goes right back up and it wrecks you. And then you think, oh, I'll wait a minute. And then it's going back up, but already now it's high. And if you do anything and if you even place low right here, you could, depending on what the 3-minute and the 1-minute actually looks like, because the 5-minute is a fractal view of the 15-minute, the 3-minute is a fractal view of the 5-minute, and the 1-minute is a fractal view of the 3-minute. And that's the way I want you to look at this, both all of these indicators, from the candles to the stock RSI. So here's what I suggest we do. We go into our settings for our stock RSI. We go into style. We change our upper band from 80 to 70. We then go to our lower band and we change our 20 to 30. Now, what has this done for us? In that same area, we are no longer tempted to commit a prediction. In that same area, we have a little bit of breathing room now to make that committal, right? And at this point, we can now say no to more predictions right off the bat. We can just look at it. We can say, nope, not going to take that prediction. So we're on the 5-minute. Let's reset here. So now that we have our settings for the R stock, the classic way to explain this is that when we're up here at 100, we're overbought. When we're down here at 0, we're undersold, meaning that we're not. And this is real. This is all keyed off of waves of selling versus waves of buying, right? And that's one way to look at this: waves of selling versus waves of buying. So our 5-minute will kind of give us will be our big overhead view of what maybe the next 15 minutes will look like. We then go down to our 3 minutes, and now this is providing us a smaller view of the 3-minute window. And if we compare the two, if we go back to our 5 minutes, we are just starting to head down. We're just starting to cross the 70. So if we go to our 3-minute, we'll see that we are already below here on the 3-minute. So you cannot use the 5-minute to make predictions. The 3-minute here is saying, okay, we are going down. We are now below our 70 line and we're actually at 23. So now we are looking for opportunities to make a place, right? So now we're going to quickly go to the 1-minute and we're going to see, what does this look like on the 1-minute? Well, we are lining up. We've been down to 9, 10, and now we're seeing a candle flip, and we are now underbought. We are ready to make a price. We are ready to make a price movement upwards. We then take our eyes off of the stock RSI and we look and we see, where are we bouncing around here? And right now, At this moment, we are between the 50 and the 100 and 200. And the 100 and 200 are right next to each other, right? So the the next 5-minute window is probably not a good time to be placing an up. We're also not actually in an upward trend. We look like we could be reversing at the 1 minute. And the 1 minute's very squiggly. So it will flip like this left and right. Don't panic. Um, let's go back to our 3 minutes. All right. Maybe that explained this altogether. So let's tie our three tools together now. Our candlesticks, our TMA, our TEMAs, and the Stoch-RSI RSI. So we're going to go back in time. Going back in time is real easy, super simple. I'm not looking at that 5-minute prediction window. Just that 5-minute prediction window adds a whole layer of complication, and we will get to that towards the end. This is important stuff, though. We have three indicators that we're looking at. If we look right here, we can see that our RSI line, which is the blue line, and our red line, which is our signal line, our blue line is crossed the signal line and is headed upward. We are on an upward trend. We were close back here, but we are actively spreading out. If we look, we can see. If we measure, we can tell that from here to here and from here to, well, from here to here is a higher percentage. Not a lot in percentage wise, but we are obviously, those EMA's lines are spreading apart as it's going up. That's important for us. We want to be looking for that spread. These are where we're going to find our safest upswings. So if we look right here, and notice this is also in the middle, but we're on the 3-minute. We have made an upswing here. So if we can get in here, 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 we may be okay, right? We are going up on this though. And then when we get to here, we are still pushing. We're hit the ceiling and people are still buying, right? So we're sort of safe. So this is the area that we want to get. We want to try and get this bounce as soon as possible. On the 3-minute, if we can get this bounce 1 minute, 2 minutes into the candle, that's 4 minutes here. We're already above, and that is a safe bet by the time we get to this third candle and it does its spinning doji thing, right? Yeah. So that is what we're shooting for, right? And we can go to slightly safer ones. We can see that down here, if we were doing the 20, we might be tempted to jump in at this point right here. If that RSI lower was at 20, we'd be tempted to jump in right here and we could easily get wrecked in the 3 minutes. As a matter of fact, this candle right here would probably be the candle to wreck you, and then you would see it come right. If you've played prediction, this has happened to you. You think it's going to go up, it goes up a little bit, then it goes down, you lose your prediction. 30 seconds later, it's well above where you made your prediction and you would have won. And we see this all the time, and even the short ones, right? So we have our lines telling us where our support might be. We have our RSI at the 3-minute. What I'm going to do here is we're looking specifically at this one and we're looking specifically at this one. So I'm going to take an arrow and I'm going to drop it right here, and I'm going to get a second arrow and I'm going to drop it right here. And we will look exactly on those lines at the 1-minute to see what we see. And we are about 2/3 of the way through the indicators that we're going to be using. So we need to go back in time, and we see that if we looked on the 1 minute at that period, we have a great basically 1, 2, 3, 4, 5, 6 candles up. We are out of the woods altogether on this prediction. We now go to our next one, which, by the way, let's keep time frames in mind, right? With this method, the only real safe predictions are an hour between each other. An hour. And I'm not saying that's the only one. You could have taken this one right here, and this one would have been safe. You could have taken the down maybe somewhere, and maybe you would have won this. 1, 2, 3, 4, 5. That would have been iffy. Maybe you could have taken this one right here, and yeah, that would have probably been a good down. So there's 2 or 3 easy C's within this hour, right? But for me, I only really see 2, and this is hindsight 2020. So now that we've got this in place, hopefully we're getting an idea of what we want to do here. The reason you want to paper trade, and the reason I stress paper trading so much, is that these are not 100% accurate predictors of the future, and they're far from pretending to be predictors of the future, right? So you need to work with them. You need to get a feel for them. There is no system there is no 1, 2, 3 profit system for prediction. You can completely forget about that. So now we're going to add our third indicator, and this one is a new indicator that I just thought about, and I thought really hard, what can I do that will make it easier for me to tell whether or not I should be placing an up or a down, even if I'm in an overall upward trend. And for that, I went to another moving average. This one, the input, I'm suggesting 20. And let's see what that looks like. And we'll go ahead and we will get rid of the TMA for now. And what we start to see here is a fairly good pattern. Here we're sideways, and we are on the 1 minute, or this is what I might call a sideways move here, and we're going left to right on that 20 EMA, but we're still above it. This is telling me we may go up, right? Now, as soon as this broke this kind of channel here, that's when I'm going to be looking for upward swings. Now, unfortunately, so on the 1 minute, this can be very helpful. For instance, right here, God, this moment, while I'm explaining this, on the 1 minute, this is a perfect entry right here. You don't get any better than this. Not only did it cross right here at the perfect time, you could have seen this, you were warned about this the minute before, right? You had to place it, and then it goes up to here, and you're safe basically. This is basically safety at my point. You got 1 minute, 2 minute. By your third minute, you're safe. Then you're up here and you're still hitting the ceiling. If we go to our 3 minute, we can see that we're still moving upwards. And if we go to our 5 minute, we can see that this is now switched and it's giving us a little bit of a push upwards. And we can see that on the 5 minute, we're above that 20 EMA. So that's the addition is the 20 EMA. This could be resized, and let me just do that real quick. It's a subtle difference, but if you go to 12, this is one of this setup that we're looking at right now. As far as I know, and this is why I went with this. This is why I tried this setup for prediction in the first place. This setup, right, that we're looking at right now without the EMA, this is almost the perfect setup for trying to scalp tops using the 12 EMA. And the reason is because if we go in and we look at our back, because without prediction getting in the way, right? Without prediction getting in the way, we would have easily predicted that we could get in here. And I'll show you what that prediction would look like. Right here, we could even take it when it crossed, right there. And if we were scalping, right, that right there is not very much, but we could have run this for a 1%. And you might be saying, oh, that's not very much, and you wouldn't make very much off of that. Well, if you're dropping in $1,000 on this, and this trade goes on the 3 minute for 1 hour, that's $20. If you're doing this, the people that are using this technique are using exchanges with really low fees that you can bundle trades in together, and this system works. It doesn't work for me. I'm not a scalper, so I can't exactly tell you exactly, you know, I think this is the best scalping technique. This is the one that everyone that I've ever seen that's any good at scalping, this is their setup. This is their basic setup that they like to use for scalping. And that's why it works so well for prediction. So I'm not inventing anything new. All that I'm doing is I'm just trying to adapt this. So let's go ahead and we'll change this back to 20 because right now that's what I like. We will go ahead and we will add back the indicators. And this is our setup. So with this setup, we want to pay attention to the candles. We want to pay attention to our different EMA lines, where the support is. Our blue line is going to help us make a decision whether or not we should up or whether or not we should down. And it will also just give us a much better indication of whether or not we're reversing in any kind. It will be our first indication of whether or not we're reversing in any trends. So hopefully that all makes sense. Which takes us back to the slides. Our time frames. Our time frames are very important. We're going to be using the 5 minute, the 3 minute, and the 1 minute time frames. It is important for you to concentrate on the 3 minute time frame, not the 1 minute. The 3 minute time frame. I know you want to watch your trades on the 1 minute, and I would actually suggest that you get out of that habit and watch your trades on the 3 minute. Actually, place your trades on the 1 minute, but watch them on the 3 minute. And watch a YouTube video instead of watching your 3 minute trade would be better. That's what I do. I will place a trade and then I will watch a YouTube video and I will come back 10 minutes later disappointed because I lost or I won. If I win, I go back to watching YouTube. The 3-minute is where you want to look for your buy signals. You then want to switch to your 1-minute and you want to look for your actual entries. And then, if you got the opportunity, you want to switch to the 5-minute and you want to verify that that's in a support position, which means under the 30, preferably under the 30, if you're wanting to go up, or it's completely pegged at the top, right? Because you'll see that too, and you'll see where the RSIs at different levels will get pegged at the top or pegged at the bottom. And you can use the 5-minute to give you an idea of whether or not at the 3-minute that might stay pegged or not. It You'll have to paper trade, you'll have to see it, you'll have to get a feel for it. But the 5-minute can also be used to verify runners, whether or not you're going to see, and this is the Stoch-RSI, whether or not you're going to see something really go high. And you may use the 15. You can use the 15 also. So, once again, on the 3-minute, we are looking for movements crossing above the 30 on the Stoch-RSI. Then we want to switch to the 1-minute to look for your prediction entry point. And down here on the 3-minute, I actually have this marked where it comes in here and it has basically another 6 minutes of upside after the place, and that was a winning candle. What's interesting is right next to it, before that, I had what looked like a good entry, and I placed, you can barely see the green mark, but I placed a paper trade there, and that was a losing entry. So the reason why was because this was higher, this was high and away from the 50 right there. So you want to switch to the 1-minute for your prediction. So let's talk some more about trends, because you need to watch the trends. So for this system that you are just learning and just giving a try, and that you're going to do a lot of paper trades and figure out whether or not you should even be placing real money, you're going to be looking for upward trends. You're going to be and you're just going to be placing ups. And I chose upward trends for a specific reason. Personally, I believe that the next month will be fairly good for upward trend predictions, right? The next month, after that it could get wild, but the next month, whether it goes up or down, I think it's going to go up. That's why I say upward trends. So concentrate on the upward trends, right? And when you're in an upward trend, you want to place up predictions. You want to avoid overreaching, but you don't want to get overconfident that it's now going to go down, because a lot of times it will get really high, it'll go a little bit sideways, and then it'll go right back up. You don't know until you have measured your sideways and figured out where you are next to the EMAs and what type of buildup you're getting up on the R stock. So if we're going to do that on uptrends, we can also do that on downtrends, but we want to look for full downtrends that are starting, and we want to play the full trend, right? So we want to see those EMAs get further apart as we're placing trades. The moment they start to get closer, we're going to stop. Whether we're placing ups in an uptrend or whether we're placing downs in a downtrend, I know that's backwards from a chart, but hopefully you're getting the idea. That is so important, right? And then sideways, because we don't just have up and we don't just have down. We also have a third one in the mix, and that is sideways. And sideways, this is action that you want to avoid. This becomes much more risky, and identifying when you're sideways being able to predict something like that at the 3-minute will save you at the 1-minute, because at the 3-minute, if you can't see that there's sideways action, when you go to the 1-minute and you get hyper focused on the stock RSI, which you don't want to do, you're going to go wrong. You're going to go the wrong way, because no matter what you do in sideways, the law of averages is that you're going to lose. That's just my law of averages. I know it's not a real law, but please avoid sideways, especially in the beginning. Be very cautious. It's better to think that it's sideways and not place than to think that it's not sideways and place, if that makes sense. So caution, err on the side of caution. Once again, the EMAs, so important. We have green, we have yellow, and we have red here. We are looking for that separation. We're looking for where the green goes over the red. We're looking for where the yellow goes over the red. We're looking for it to spread apart. Once it stops spreading apart, which is right around here on this picture, right? We need to seriously consider not making another placement. So once again, we want to place when our EMAs are spreading apart on an uptrend. We want to wait for bouncy action, good bouncy action, right? And we want to stop when we start seeing that the EMAs are no longer spreading apart. Because at that point, when they stop spreading, when you notice that they stop spreading apart, well, chances are you won't even notice that they stop spreading apart, because you'll be so hoping that they keep spreading apart that when it does dip and they start come together, you'll start losing your ups. And then you'll start wondering, well, I'm betting up, I'm in an uptrend, why am I not? And it's because now you're getting that wiggly on the 50. So hopefully that's clear. All right, some tips, right? When to place. You are looking for the RSI line. You are looking for when the blue RSI line crosses the red signal line and is either in that 20 to 30 range. Now I know that I shortened that to 30, but you're going to have to make your own decision. You're going to have to paper trade, and you're going to have to get a feel for the moment, right? Because all of this changes moment by moment. That's another thing that you have to understand, and that's what makes it fun and challenging, right? But you want to wait for that the the blue RSI line to cleanly cross over. You want to look for an X, not something like this, but an X. You want to cleanly cross over that and then head up into that 20-30 range, right? Preferably the 30, because that will hopefully keep you from making a lot of bad bets at the lower levels when you're placing ups, right? Hopefully that'll keep you on the 1-minute, right? Now, watch for bottoms and tops. I am going to do some paper trading later, but I want you to watch for bottoms and tops, because you'll be heading upwards and you'll hope that you can keep doing it. But if you're zoomed in, you won't see that you're about to hit a recent all-time high. And a recent all-time high is usually where you're going to see resistance going up, and you could see a sharp decline. Instead of seeing it bounce around sideways, it could just be a steep decline. And that's a lot of ways that you can also lose. So watch out for bottoms and tops. Check the 1-minute, right, for your entries. And the 1-minute will also be very important for seeing when you're bouncing in between EMA lines. So that's real important also. Now, next one. Let's go over the simple rules real quick on how we're going to play this. With the trend, if we are in an uptrend, don't place a down prediction. Wait on the RSI. Wait for the blue RSI to actually cross the red signal line. Don't place too soon, which is why I pulled the RSI lower up to 30, right? And then know when not to place, right? And that's a big one right there. Those are all those spaces that are sideways. It's all the places where we're bouncing on one of the EMA lines. It's all of the times that the 3-minute does not line up with the 1-minute, or the 1-minute does not line up with the 3-minute. So you have to know when not to place. So with that said, these sound like hard and fast rules. If you're paper trading and you're not playing with money, you can play around. You can say, I really got a feeling. You can place that paper trade. And maybe you'll have a notepad off to the side where you say, I placed this paper trade on a feeling. And then you can measure what your feelings are worth. For instance, well, next one right here is paper trade. So let's talk about paper trading, because this is so important for you not to lose money. This is what all the professionals do. They all paper trade. The day traders, they all paper trade. This is how you sharpen your skills. This is the only way to get to a 60% win ratio. If you're not paper trading, you are fucking around. I'm just going to say it. Paper trading is free. You, all of these tools are free. This costs you absolutely nothing to learn. There's no course you have to buy. There's no tools you have to go out and purchase. All of paper trading is free. And if you come up with your own wacky system and your paper trading works, then it works. And nobody can doubt you when it works, right? You want to get above 60%. At the very least, you want to be above 60% before you start placing money, right? So you can also use paper trading to try new systems. Let's say that you just watched a YouTuber and they're using a new tool and you want to try the tool. You don't want to use money whenever you're trying any new system. So this helps you try systems before you get too invested in them, right? Gaining confidence. Paper trading will get rid of those heart palpitations. It will get rid of your sweaty palms, right? You will gain confidence enough that you can go walk away and go take care of your bathroom problems and stuff like that, okay? No system is 100%, right? So above 60% is winning in trading. Maybe not prediction, but in trading, above 60% is winning. In prediction, if you're above 70%, you're doing good. You're doing real good. And there may be people out there that are above 70% and they have a system that works really well. They're not sharing it. So if you use this and you come up with a system that gets you above 80%, please share that with the community. All right, paper trade. Have you got the idea yet? Kenny Rogers. Now, this is where I'm going to ask you in a few minutes to pause this, in a few seconds to pause the stream. I want you to pause the stream and I want you to open up a new tab and I want you to Google The Gambler, Kenny Rogers with lyrics. And I want you to listen to that song and I want you to absorb that song. Yes, it's an old song. Yes, maybe country music does suck. Yes, maybe Kenny Rogers was something that your great grandfather listened to. I'm not a big fan, But this song has stuck with me my whole life and has been some of the best advice. But you need to hear it from the master, and you need to hear every word of that song, and you need to play it in your head. And you will thank me. But you need to know when to wait for that setup. You need to know that you don't take every prediction, that you don't have to take every prediction to be a winner. You have to win the predictions, right? You need to know when to walk away. If you're losing money, if your hands are sweaty, if your heart is going crazy, you need to walk away, right? And you need to know when to run. Are you losing serious money? Are you addicted to this? You need to ask yourself that question, right? So there's my Kenny Rogers. I hope you listen to the song. Hope you enjoy the song. Hope it doesn't grind like chalk on a board. Okay, so we are done. Good luck. Hopefully now you are interested in learning to trade for more than just prediction, because trading is rewarding and fun. Taking the time to do your own research will start bringing in the rewards. And while prediction is fun, it is no substitute for time and market, which is investing at a low entry point and holding on to that for a long period of time. People that you see on YouTube now that have YouTube channels and they're buying Lambos or Hellcats or whatever the hell they're buying, they were in this in 2017. They held on. They waited and they bought at the lows, and that's how they made their money. You can do that too. We've got a whole nother cycle coming. It's not too late. Learn to trade now. Learn to trade with small amounts. Do your research. I want you to be successful. I have gotten a lot of messages about I will give you money if you sit with me and talk to me about how to do this. I have turned all of those down. I have had people tell me that I should not be sharing this system. I should be working on this system and charge for it. I've heard all kinds of things like that. I like tacos. I'm not going to be against free tacos, right? So with that said, we're going to go to our screen and we are going to start doing a few paper trades here. So let me bring up prediction. Okay. We have prediction. We have 20 seconds. We are missing out right now. The first thing that I want to do when I sit down is I'm going to want to look at something higher than this. So I'm going to want to look at the 1 hour. And I am clearly in a severe uptrend. We see right here that we've bounced. We've bounced our one bounce, and now we're bouncing weekly at the 1 hour. Or week, yeah, we have a weak set of bounces at the 1 hour. So we'll drop down to the 15 minute. 15 minute is still looking good. Our 50 is showing that we are bouncing around here. We're now at our 5 minute. And now we're going to start looking at our RSI at our 5 minute. And the RSI on the 5 minute looks like it's been squiggly, a little bit sideways. Looks like we're pointed down, but we've seen that 1, 2 more times. So this is why I changed the default settings to 70 and 30 to keep me from getting confused if we were thinking about possibly going down, because we're already down pretty low. We're already close to the EMI. At this point, I don't know what I would do. So let's go to our 3 minute. Our 3 minute is going to be our major deal. This is where we're looking for things. And what we see is we see a fresh cross up on the 3. We see a fresh up here on our RSI. We are below the 50 and we are going up. So let's verify that on our 1 minute. We are close to our overbought. We are bouncing around here on this line. So what I want to do is this is just what I do. So I want to set a little bit of parallel here. Because I have a feeling, and if you notice, this little parallel line box that I've drawn is pretty close to center of that 50 EMA. And what I'm looking for is I'm looking for this to go up or down. And we have 3 minutes until the next prediction starts, but we only have 1 minute and 40 seconds before we want to make our call. And now we're going up. So let's go back to the 3 minute, see where we are on the RSI. So remember, our goal is to make a decision with 1 minute left on the clock before the next prediction. So we have 60 seconds to watch here. Our 3 minute is going up. We are definitely not in any kind of a channel here. We want to verify this on the 1 minute. We have a candle bouncing off of the 50. We have another candle that is trading above it. We need 5 minutes though. And we have not had 5 minutes consecutively for a while. Does that make sense? Here we've got a whole bunch. Here we're building up. So how do we know when that 5 minutes is going to come up? Well, chances are when we have a better setup, when we have a better match between our 1 minute and our 3 minute. So we may need to wait. So if we look at our 5 minute here, our 5 minute is still pretty high. So our 1 minute is already high. So now is not a good opportunity to jump in. So we will watch this for just a few minutes and see if we see an entry again at the 3 minute. And this is the worst part. Now, I haven't tried this with a double down system or anything goofy like that. But there's got to be a system out there. I see people dropping sometimes I see people dropping 7 or 8 B&B the moment you can hit enter up or enter down. Like the moment that thing comes scrolling across, somebody immediately is dropping like sometimes, sometimes it's a lot of B&B and that person has to have some kind of a system. But that strategy would be a follow the whales strategy. I tried that and it completely wrecked me. So it's a good thing we did not go into that prediction. That's what I'm thinking, according to this 3-minute candle that's coming up. So we're going to come down to the 50 EMA. But remember, we're looking kind of good here in the sense that we have all of our EMAs are lined up and our green is spreading from the yellow. And the 20, the blue line is definitely spreading from the yellow. So let me go ahead and get a line ready here. And if you're wondering, this line is exactly 6 candles long, meaning that if I enter in on this candle, I have 1, 2, 3, 4, 5, and then it's over. So the same logic that told me not to go up might have been applied to place down instead. But I really want you guys to concentrate on one direction, getting that right, and then you can branch off and start working the swings. And working the swings, that's where you're going to start getting 4, 5, maybe even 6 predictions in an hour, right? And 10% times 5 in an hour is good no matter what you start off with. And I generally start off with anywhere from zero point 0.1 BNB to zero point 0.2 BNB and just let it ride from there, so to speak, and then flush it all out. And then that way, all of my bets are at least under 20 bucks. Although it because for me, 10% of one B&B is a wildly high amount of money. That's a lot of money to me right there. 1/10 of a B&B. It just is. So I think I start off with anywhere from like 40 to 80 bucks is what my guess would be. 40 to 80 bucks. So we're still waiting on the 3. We've got some good news though, is we have bounced off of the 50. We're in between the 50 and the 20. Now we're using the 20 to decide whether or not we should place up or down. We're using the 50 and the 100 and the 200 to see where we're getting support and where we're going sideways. So we're getting kind of low here. We may as well check the 1 minute. And it looks as though we're getting set up here for a pretty good prediction. So let me go ahead and change this to a green, just to be clear. Now, keep in mind, our EMA are starting to go towards each other. They're no longer spreading apart like they were right here, right? Because here we're spreading apart, then we come up. Here we're spreading apart, but right here, it looks like we're coming a little closer together. And then, of course, we're in that area where I always want to check for sideways. So where would my sideways be? Maybe something like this is what I would be worried about for sideways. It might even tighten up. But on our 1 minute, we got our jump. On our 3 minute, we're getting close. We got 2 minutes on prediction. So our big question is going to be, will this line up with prediction? Will this line up with that 5 minute window? Big candles are also not your friend. I should throw that out since we need to look at candles also. So these two candles, we see two pretty big candles, but then we see it stop. But these could have easily come straight back down. And that happens to me all the time, right? So we got our bounce here, but we're not above. That's not a good example. So we need to make our decision in the next minute. So let's take a quick look, see where we're at the 5. So on the 5, we're still kind of headed down. We're not at the 50 yet. And we're swinging up a little bit. We got 30 seconds left. We're going to look at our 3 again, which is looking good. We're going to go to our 1 minute, and we have big candles, but we are now above this 20. So with 1 minute and 20 seconds left, let's see what happens on this. We are dancing on top of that EMA, which will make this a tight prediction. But we are 50 seconds in. So at 45 seconds, we will be hitting that button. Before we do that, let's just do one last look at the 3. It's a gamble, but let's do it. All right, so our first paper trade of the night is going to be on this candle right here. Well, actually, the next candle over. The way that's bouncing. It's not so good. But we've committed to this prediction, so. And then, like I said, let's look at this on the 3 minutes instead of the 1 minute. And we can watch what's happening on the RSI. Also take a minute to look at the 5. With 1 minute and 30 seconds left on the 5 candle, we can expect a little bit of pullback. Always expect a little bit of pullback at the beginning and the end of a candle. Always expect a wick, in other words. 1 minute into the prediction. So if we lose the 20 EMA, then it is game over. There will be no way to recover if it drops below that 20 EMA. So our goal was to have one candle trade above this EMA, which we had, and hope for a bounce. Kind of like here. And we have 2 minutes and 30 seconds left on this prediction. It seems to stretch out forever, these 5-minute intervals. And your hopes can get up and down, even at the 3-minute. So with 60 seconds left, let's go ahead and drop down to the 1 minute and we'll watch. And we got busted up by a little bit of sideways and down. So this is probably, 2 minutes left on this. This is probably, well, it depends on what it's going to do. Prediction, right? Oh, shucks. What is this? 467.8? Yeah, okay, I'm on the right line. Yeah. 55 seconds. Notice our 1 minute at the beginning started to go squiggly on us, and now we're going back up on the 1 minute. We're bouncing, so we could easily still lose this, even though it's bouncing on that line. And now that if this thing is bouncing red, 13 seconds left. This thing's bouncing red up and down. It's a horrible, horrible feeling, this right here. You have no idea whether or not you won or lost. And you're just sick because at the end you're like, oh, it was up, or any minute now. Yep, there's our green candle up, and that was a loss. So we will put that down as a loss. But we were pretty sideways, and maybe that's a good example of looking at how we're sideways here on the 50, and we're getting close, and maybe we shouldn't have taken that. Only now, let's look at the 3-minute. Now the 3-minute is actually looking better for a prediction. So if we had waited 5 minutes on the 3-minute to catch up and get closer to that 50, we might have had a better opportunity. And we'll make a blue line for that to show that we did not make a prediction on this, but this is where that line would have been. So actually almost the same, actually lower than the last one. So let's take a look at the 3. Another good idea for paper trading is to start off at least paper trading. That way you can get warmed up. So I will call that first loss close, but a loss, definitely a loss, but I will chuck that up to needing to warm up here. Okay, so we are coming up on 1 minute, and I might predict a down. So at 45 seconds, I'm going to do down. And 3 minute mark here. So keep in mind that if we're in an uptrend on all three of those, the first rule is I should not have taken it down. All right, so we're coming up on 3 minutes or 30 seconds to make a decision. RSI is up, going up. 5 minute is going up. 1 minute is still going up. We're in an upward trend. Now, we have already passed what would be considered, what, 4 all-time highs in what is some pretty serious sideways movement that we don't want to be in. But are we going above that sideways movement now? So we're going to go ahead and we're going to say yes. We're now above that sideways movement and we're going to see what happens. Yeah, 1, 2, 3, 4. Nice crest going up there. 3 minute, still going up. 5 minute, looks like it's support. Our candle just went off, or our prediction just went off, so 68.6. So we're actually dropping it down a little bit from our last one. Let's get rid of that. Back to our 3 minute. Yeah. See, we're already pulling pretty far away I like to grab my measuring tools. Coming up around halfway through, that's that moment that I start to worry a lot, right? Because that's when that next one and two red candles going to come in and just knock me out of the picture, just barely. Kind of like the way the first green that we placed was, that felt really close to me. But if Pancake's prediction decides that it's a loss, it is definitely a loss. Okay, so now we're 2 minutes in till the next one. So 5 minutes, still a little bit of good support, obviously, since that's not a leading indicator. The one, though, is definitely we are losing hard. We're not, well, shucks. We're not allowed to place a down. So I'm going to get rid of the down. We're not doing any more downs. Well, gee, I don't know. Should we? If we do down ups and downs, we can play every single round, which is what I was thinking, and not skip anything. We're going to need the blue because sometimes I'm just not going to know what to do. So we're losing pretty hard here on the RSI. However, what are we doing on the 3? We're still reaching up. What are we doing on the 1 minute? I'm going to say that no matter what, 45 seconds, I don't know what I'm going to do. I'm going to put a blue. Because I don't know what I'm going to do. It's already too late for me to press the button either way. Blue. The other thing is, I'm seeing sideways. I'm seeing sideways. We're a little bit off from these lines. I'd like to see before the next prediction I, I make, I'd like to see this green line a little closer to where our price is. That would be nice. Um, or I'd like to see a even bigger distance between the green, yellow, and red EMAs. So that last one scored as a win. So for the purposes of this video, I think what I'm going to do is I'm going to try and place every green I can. I'm also going to try and place every red I can. But since we're in an uptrend right now, and the rules are don't do it down in an uptrend, I'm not going to count the downs. I'll count them separately, but holistically, I'm not going to count them. If that makes sense. You'll know both numbers, but I'm going to use two sets of numbers instead of one win-loss ratio, so to speak. So this is really good. This would have been a good down. So let me get rid of, but I was worried about sideways. So, and like I said, I'm not supposed to be doing downs. Okay, so let's go back to our 3-minute. And we have 2 whole minutes to wait till we need to make a decision of up, down, or abstain. So we look at the 5-minute. We are squiggling on the 5. But as long as we're squiggling above that 70, we might be staying in an uptrend. I believe the green lines are getting farther away. So this is crossing over here, but that may mean that we're getting a good setup here. I would have liked for this to go lower, but technically it's entering, and we've got 1 minute left. We've got 30 seconds to make our decision of whether or not we're going to go up or not. We already have some distance. We've actually gone up to a higher high. So in the next 20 seconds, 30 seconds, let's look at the 3-minute. And on the 3-minute, I'm going to say no at 1 minute. 15 seconds left to hit the button. I'm going to say down. Because my downs don't really count. We'll get a percentage of ups versus downs. Because what I would think, to be honest with you, is that I would automatically assume that that my ratios, that my win ratios of downs during an upward trend would be much lower than my ratio of upwinds during an upward trend. So let's see, what are we looking at for a price? That hardly seems like it's fair. And the reason we're doing this is because of the 3-minute here. And right now, it's looking like it could cross beneath, and that would be good. That would be something that we would want on the 3-minute. That would bring us closer not only to the 50, but also starting to ride the 20.